We've got a few points. We'll have additional slides on this as well. Deficiencies in the design of controls. These are just many different examples. I'd say, be familiar with them. Be able to, I wouldn't say you have to memorize every single one, but I would say be quite familiar here. Now, when you're designing controls, right, management's responsible for the design, implementation, and maintenance or management of them. Inadequate design of controls over the preparation of the financial statements being audited. Inadequate design of controls over a significant account or process, more specifically, right, line items there. Inadequate documentation of the components of internal control. These would all be deficiencies. Insufficient control consciousness within the organization. For example, the tone at the top and the control environment. There's just not anything positive going on there. Absent or inadequate segregation of duties within a significant account or process, and more deficiencies. And lastly here, absent or inadequate controls over the safeguarding of assets. That is going to be another deficiency. Again, like I said, just be familiar with these. Good examples of issues that could arise if you don't design those controls properly. As promised, we've got some more here for you. Inadequate design of IT and general application controls that prevent the information system from providing complete and accurate information. So yeah, a little more broad, but again, there are a lot of items that will fall under these points. Employees or management who lack the qualifications and training to fulfill their assigned functions. Yeah, that's definitely a problem, right? You should have internal control within HR if you want someone who has a CPA license or a business valuation license or a CFA or whatever license it may be. You should have an HR function, which is technically an internal control, that makes sure that whoever's hired for a specific role has that credential. Maybe it checks their identification number for their license against the database. For example, in an entity that prepares financial statements in accordance with GAAP, the person responsible for the accounting and reporting function lacks the skills and knowledge to apply GAAP in recording the entity's financial transactions or preparing its financial statements. In a way, also HR and those who interview potential employees, they act as an internal control. They're making sure that anyone who is hired for this role is able to fulfill it, has the knowledge and ability to get that done. We've also got inadequate design of monitoring controls used to assess the design and operating effectiveness of the entity's internal control over time. And lastly, the absence of an internal process to report deficiencies in internal control to management on a timely basis. Great examples of these deficiencies. All right, now we're talking about failures in the operation. We mentioned before that the design relates to design, and then operation is more related to implementation and maintenance of those internal controls. Well, here we're going to see failure in the operation of effectively designed controls over a significant account or process. For example, the failure of a control such as dual authorization for significant disbursements within the purchasing process. This company maybe needs to buy a lot of inventory. Obviously, that's expending cash to go buy that inventory. And if it's significant amounts or good business practice as well, is you're going to want maybe 2 people to sign off on this purchase. Now, if that's not a requirement, if there's a concern there, then yeah, I would say that is a failure in the operation of internal control, because maybe you did design the control to require dual authorization. However, it's just not being implemented and maintained properly. Next, we got failure of the information and communication component of internal control to provide complete and accurate output because of deficiencies. If you are not being informed about the issue in a timely manner, the fraud could have been perpetrated and covered up before you even hear about it. Completeness or accuracy. So for example, the failure to obtain timely and accurate consolidating information from remote locations that is needed to prepare the financial statements. Another internal control for operational and financial effectiveness. If you've got multiple entities and there's nothing requiring that information to be communicated from one branch to another, and those are not aggregated in time, you can't get financial statements out in time. That's a failure in the operation of internal. We've also got failure of controls designed to safeguard assets from loss, damage, or misappropriation. It include inventory, equipment, cash, obviously. This circumstance may need careful consideration before it is evaluated as a significant deficiency or weakness. So for example, assume that a company uses security devices to safeguard its inventory, which are preventative controls, and also performs periodic physical inventory counts, which is a detective control, timely in relation to its financial reporting. Now, although the physical inventory count does not safeguard the inventory from theft or loss, it prevents a material misstatement of the financial statements if performed effectively and timely. Therefore, given that the definitions of material weakness and significant deficiency relate to the likelihood of misstatement of the financial statements, The failure of a preventative control, such as inventory tags, will not result in a significant deficiency or material weakness if the detective control prevents a misstatement of the financial statements. So we see here, this is a what we'd say a dual control. We use security devices such as tagging our inventory. Now that's a preventative control. In conjunction with this detective control, we do not have a significant deficiency or material weakness because it will prevent a likely misstatement on the financial statements. Lastly, here, material weaknesses relating to controls over the safeguarding of assets would only exist if the company does not have effective controls, considering safeguards and other controls, to prevent or detect and correct a material misstatement of the financial statements. Again, over and over, we are very much concerned as the auditor about the material misstatements that possibly exist on the financial statements. That's our concern. We are not concerned, yes, we are worried if they have, we can advise them if they've got pretty bad business practices, but definitely something to keep in mind. Financial statements are our goal. We've got a few more here. Last slide here, I promise, on the failures in the operation of internal control. We can see the failure to perform reconciliations of significant accounts. You got worksheets for each account. You've got roll forward schedules for debt, for PP&E. For example, accounts receivable subsidiary ledgers are not reconciled to the general ledger account in a timely or accurate manner. Undue bias or lack of objectivity by those responsible for accounting decisions. That sounds pretty bad. For example, consistent understatement of expenses or overstatement of allowances at the direction of management. That's very much a concern. Misrepresentation by the entity personnel to the auditor, which for sure I would say is an indicator of fraud. Management override of controls, ding, ding, ding. Failure of an application control caused by a deficiency in the design or operation of an IT general control. And lastly here, an observed deviation rate that exceeds the number of deviations expected by the auditor in a test of the operating effectiveness of a control. So for example, if the auditor designs a test in which he or she selects a sample and expects no deviations, finding one deviation is a non-negligible deviation rate because based on the results of the auditor's test of the sample, the desired level of confidence was not obtained. But we are doing some testing, and we expected 0 issues. If we expect 1 issue, that's a concern. If we expected 2 issues and then we actually had 1 issue, that's not a concern. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.